What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, the bearded boy wonder, Dave Bartosiak. And today, my friends, it's a glorious morning. Happy Friday, everybody. Thanks for joining. Got the usual suspects trickling on in. Kurt, Trevor, Danny. How are you guys doing today? I am fired up because we've got all sorts of stuff going on now. You have to bear with me a little bit because I got a lot of windows open. Lots and lots of windows. Among them, we got some music playing. But I think what you're going to see is I'm going to be quietening this music off because I also have CNBC going here. It's my Yellen's talking, I guess. We got the Jackson Hole right here. I'm pretty sure CNBC does not want me to broadcast live simultaneously on this, right? So I can't do that. But I got one eye. I got one eye on this, right? What else do I have? I got some tools today. I busted out the E-Trade sort of real-time thing here. I think I'm going to, I just don't know how I'm going to incorporate all of this in one thing. So this is like a widget I'm going to have to think of in the future. Jeff, I know you're really good at this stuff, man. So perhaps, I need to brainstorm of how, because wouldn't it be awesome to have, instead of this, I guess this is cool coming on the bottom of the screen for, whatever purposes, advertising or whatever, getting people calls to action, so to speak. But it would be pretty sweet to have like a live ticker going somewhere, right? So I think that's part of what I'm gonna that's what I'm gonna do here is I'm gonna have like a real time sort of thing happening while so we're gonna multitask. I think in the future we'll look forward to something like that. So I'm heading back to Chicago. I'm just gonna put this over here, guys. Well, I guess I can leave it here for now. Heading back to Chicago next week. Yeah, in Discord, right? In Discord. I'm heading back to Chicago on Wednesday. So we're going from Wednesday to the Wednesday after. So there's going to be an interruption here in Live Trader. So don't expect. So next week we're gonna have like Monday and Tuesday stuff, but then that's gonna be it for the week, because I'm doing something where I haven't done and I can't even remember when. I'm taking days off. I don't know what's wrong with me. I honestly, it's because I really love what I do. I guess I haven't had a day off, like in a long time. Zach is gracious enough to give us 15 vacation days a year. 15. I think I've been at Zach's for 4 years. It's going to be 4 years in January. I think I've taken 4 days. Like in the history, all 4 of my years, I think I've taken about 4 days. So I'm definitely going to take a couple days because my girlfriend's coming up with me. So, we got to show her around Chicago a little bit, right? Okay. So that's going to be, well, when I'm up there, I'm going to sit down with the powers that be and discuss sort of the next iteration of Live Trader. What are we going to do with this? How is this going to look? So I think I know you guys are going to like it, what we do. Because essentially right now it's like, this is like a shoestring operation that I'm running myself. So what's going to end up happening is I'm going to go up there and I'm going to get some support essentially, and we're going to change the way this looks, and feels and all sorts of stuff. So there'll be good changes. Nothing's going to be bad. It's only going to make it better, because I will protect the the good parts about this that we like, that maybe aren't, I don't know, 100% in line with the other services at Zach's, but this is supposed to be different. And I've been entertaining some other wrinkles to it too. So, okay, let's talk about this. So Kurt Kurt brought this. Kurt's talking about USO and the hurricane. All right, so this is good. Let's go ahead and we're going to do this. First of all, we've got the Yellen speech, right? Making progress towards stability, blah, blah, blah. There's nothing there. So let's go back to the music. So that's the first thing. The second thing is, let's look here. Now, we don't have to go... So you guys all know Hurricane Harvey. It's building... heck, let's just look at it. Who cares, right? It's building up in the Gulf of Mexico right now. Right by Texas. Hang on, guys. Sorry. Let me... All right, here we go. Storms on a telecast. This is my new weather guy, right? All right, so here we are, folks. So Hurricane Harvey was a tropical depression, tropical storm, whatever. Finally, now it is a hurricane. Now, the good news for the people of Houston is that it's not a huge, it's not like a Cat 5, right? I think it's just a Cat 1 right now, and I'm saying just a Cat 1. That's still a hurricane. It's still dangerous. People still need to, take heed. But it should be manageable. Maximum winds getting up to 110 miles per hour. That's awful fast. That's sustained winds, I suppose. Gusts up to 125. So obviously a little bit of a disturbance here. Okay. Now there are some platforms, and we could probably get a map of the platforms that are out, in the Gulf of Mexico and make this more scientific and all that. But I did see that ExxonMobil was talking about shutting down, and essentially they're saying about 10% of the U.S. economic output of oil is going to be shut down, right? So supply side, it's definitely a little bit of a dent. I'm going to pull up X oil, not USO first. Same thing, proxy. I'll go into USO. So from just like an economic perspective, right? What's happening? Some of the drilling stations are being shut down. The refiners are going to be more affected. So if you're talking refiners, guys, they've probably already bought any oil that they're going to buy, right? So the refiner side is the demand side issue, right? The demand for that oil, and then now they have to refine it and turn it into gasoline and stuff like that, okay? So I think what's going to be more affected than oil is RBOB. So that's, the gasoline. So is it UGAS? There's a couple of ETFs. Let's find them. Where's Eric Dutram when you need him? There are some gas ETFs. So those are going to be affected more. The gas prices are going to be affected more than oil prices are going to be affected by this storm. Okay. Now, this hurricane did just pop out of nothing, right? We all knew. So I think part of why you had this bounce in oil off of the 50-day, kind of retesting that trend channel, was due to this storm developing. Also, you had, I think there was a Libyan event or something that was putting some stress on prices. Either way, so a mild retracement, a mild move off of the 50-day, still within this trend channel, still to the south side of that trend channel. Is it to be expected that this moves a little bit when it hits the 50-day? Absolutely. Guys, look at here. From the bottom, when it broke underneath that trend channel, rallies up, stalls out at the 50-day, comes down, is still within the trend, and then works itself higher, right? So now we're on the flip side of that, underneath this trend channel, comes down, and naturally catches a little bit of a bid, has stalled out, and now here we go again. So what you're going to need to keep an eye on is the interaction of oil prices with the 50-day moving average. Now, I still contend that doesn't matter and that oil is going to find its way down. That this is temporary stuff happening and it's still going to find its way down. That's why I've still got my USO puts on. I'm comfortable, and I'm actually thinking about adding to them after we get out of this UVXY trade. So that's my plan, right, heading into this. I think it's a good plan, right? Solid. Because I'm just hoping that this continues to come under pressure, right? Okay. So I think my USO thesis with regards to what's happening with Hurricane Harvey is that they didn't have to wait for the day of the hurricane to make moves, right? Trust me, they made moves ahead of time. So perhaps it's already done when it comes to the crude side. Now, gas prices, I think, are going to be affected. I think you're going to see a little pain at the pump because that's going to take a little bit to work, maybe a week or so to work, or two or whatever, to work itself through the system, right? So, for you premium guys out there, I'm sorry. I apologize ahead of time, but it's not my fault. We're going to feel it. We're all going to feel it. So don't plan any road trips, right? So obviously, like I said, I use USO or the X oil as the proxy. And it's the same scenario here. Sorry, I drew some inner fibs here when I was talking to a buddy of mine who's also in on this oil short. Same scenario, right? Okay, I curved that line, but that's okay. Whereas USO came down to this 50-day, finding a little support at the 50-day. So if this is blown up by the winds of Harvey, right? Once Harvey passes, I think we're golden, okay? So that's kind of what's setting up here, is we got to wait for Harvey to pass, and then we'll see. Not unlike how volatility, you like how I pivoted? You like that pivot? How the VIX, let's see if I can get a 5-minute. Yeah. Has been elevated all week. Dean, I owe you an email, my friend. I remembered yesterday and then I forgot. So I owe you an email, Dean. So I'm not going to forget about you. So here. So the recent elevation in the VIX over the last few days here, this is not tax reform talk. This is debt ceiling, mumbo jumbo. And that's all it was. So then heading into today's number, or today's, durable goods order first, right? We had a durable goods order. They were buying protection ahead of the durable goods, and they bought protection ahead of Janet Yellen's speech. So it should come as no surprise that volatility is starting to unwind a little bit here, okay? But we do have the weekend. But I think whereas they've been buying volatility into the weekend previously, I think they might step out of the way this weekend. But we'll see. So it definitely bodes well for the shorts. As we see right now, UVXY is at 30.70. So it's starting to creep back down a little bit. And we are going to address this before the day's over. We're going to dig in. We're going to get into this E-Trade account, which I have open. And we're going to put up a trade. We're gonna make a move today. Hopefully this continues to unwind, and then we can see the specifics. Why don't we just do this now, or at least look at it? We're gonna check in with it. 30.78, right? It's kind of where UVXY is. And we can see here that the 34 put is 332. Oddly enough, the $30 put still has 29 cents of premium in. So, Dave, why are you being so patient? Like, you could just rip this right now. Absolutely, guys. This 34 put is, almost trading at intrinsic value right now at 332. There's still a little bit of fluff in this 30 because we're getting close, right? So it's going to be very hard for me to get this 30 down to zero. I'd have to hold it until the end of the day. You know what I mean? So, I don't like that because I don't want to be, worried about it all day today. Remember, I paid, I think it's $165 for this. So part of me just wants to put in the 330 GTC and forget about it. I probably should have done that last week. However, early on in the morning here, I just wanted to see kind of where we're at, right? But now that I know where we're at, I think I'm going to go ahead and set this order up so we don't have to worry so much about this. Okay, so let's click trade, I suppose. But we've got a twofer here, so we've got to get the, well, it doesn't matter. Add an option leg. So we've got to, first off, buy to close and sell to close. So we got six of each. UVXY puts. We're going to have to buy to close the $30. And we're going to have to sell to close the 34. And there you go. It tells you where your midpoint's at right now. Right there, right? So, again, we're going to sell to close at 34, or the 34s. And we're going to buy to close the 30s, okay? So, we want to get, we're going to get a net credit here then, right, guys? Because if we're selling the higher value, the higher strike here, which has more value, that's a credit. And then buying, this is the debit. The debit's much smaller than the credit, okay? So this is going to be a net credit. And let's say I want 320. Can leave that good for the day. Let's see what else. Do I want to make it 320? I want to push it a little bit. Right now, the spread here, 315 to 330. So 25 in the middle of that. So 12, we call that 337. Or I mean 320. I'm sorry. 327. And then here basically 25. So yeah, so 303. They have already done that for me. Okay. So I can hang it out there 320 and forget about it. Let's do 330. I just feel better about a 330 than a 320, right? Let's go ahead and preview that. And place it. Boom, there we go. All right, so we got it out there, guys. Sell the 34s, buy the 30s. I'm going to put it out there for 330. We got UVXY at 30.90 right now. It's just too close for comfort, right? So we'll see if this gets filled later on in the day. We'll go back to it. Now, why am I doing it that way? So here we got UVXY at 30 and change. Yes, fully expecting this to kind of find its way down, right? Expecting market to kind of hang in there and volatility to slowly kind of get squeezed out. But this is the problem. I don't like it when I have 1 day left and something's got to give, right? Because when you have that situation, there's so many things outside of your control that could go wrong. And you don't can you imagine holding a trade for 2 weeks only to have it blow up in your face in the last couple hours is the most frustrating thing on earth, right? So I don't want to put myself in one of those situations. The reason why I went out 2 weeks on UVXY, because I honestly believed that by now the UVXY would have been in the mid 20s. I mean, that's when I entered this trade, that's what I thought was going to happen. Obviously, we've had some extenuating circumstances that have stopped that from happening, namely tweets and near riots and things like that, right? So ideally what I wanted to have happen is I wanted to be in the money enough so that this was a much easier decision. So all I had to do was kind of throw out the 390 or 385 and then ended up getting filled. But now, I mean, this is getting razor thin here, and I don't want to get too cute. Now, in an ideal world, I just have enough cash in there where I would just cover, the the $30 put, and then let this run the rest of the day, and this would keep on creeping down, and then you'd make a ton of money. But it ain't a perfect world. So you can't think in terms of how do I make the most money on this and make sure, if this happened and that happened. You got to flip your thinking and go, okay, on the risk side of things, you know, what's going to cause a short-term spike in volatility in my face that's going to put me at a huge disadvantage and force my hand in this regard. And you don't want to get in that. And I could see many scenarios today that put me in that situation. So if you don't want to get bent over a barrel, this is what you got to do, okay? And throughout the course of the day, especially early on, I'm going to be checking to see if I got filled or not. Or how close I am to getting filled at the very least. So right now it's still open. I can see it now. I'm still open. And a big part of that reason is that $30 put is still in the money there, right? So, the $30 put is still just outside of the money. It's right there. So there's still a little bit of juice in there. You know, the less juice, the better for me as far as that $30 put is concerned. And then the 34.50 is just going to linger there. It's going to be so close. So we'll keep an eye on that later. Okay. Come on, freestockcharts.com. So now let's get back to give these guys a chance to reload here. My goodness. And then the more relevant stock, Ulta. Come on, Ulta. Let's go. Loading on up. Well, look at what they did, man. They pushed it into this gap. Pushed it into the gap. What a strange move. Yesterday, getting all the way up to 240, and today, all the way down to 210. I don't know that I would have changed anything about this trade, though. Looking back on it, you got a stock that is down from 315, you know, to a swing low, rallies up into earnings, which I said was probably likely, you know, short covering, and then gets beat up again. A little bit of a head scratcher. Now, the report, they were talking about slowing growth, right? But we saw that. This wasn't an unknown. So there's nothing that came out that, you know, we didn't already game for or think about. So I think what you got to do here, again, whenever this happens, the first thing that comes in my head is, okay, well, is this a candidate for a bounce, right? And that's what you got to think. Anytime it's beat up, could this thing bounce? And if you look at it now, well, right now it's not bouncing, right? But could it bounce? Right now it's no, and you've got the VWAP providing some upside pressure to it, right? Or some downside pressure. So if you're looking for this, the setup you're going to need to have is a rally up above the VWAP and a move back down to it, and then you can buy it. Or a rally back up to this, which you sell. What I think is more likely to happen, which is what we've seen a lot of, is these stocks inching above it and below it and then above it and below it. And sort of all day, you're just chopping back and forth around this VWAP, and you're not really getting much love. So that's what I think the scenario with Ulta is right now. Man, what's the scenario with Internet Explorer? Every time they load another ad here, just forget about it, you know? I'm going to have to switch over, guys. I think I'm going to have to switch over to a different little platform here for you. Because this has been happening a lot more than I wanted to. And it's all because of these stupid ads. Because the ads don't work. Don't work properly. Broadcom. Look at these guys. What was this 23.6? I had that on the chart before. What is this? Let's zoom out. Oh man, I really gotta zoom out. Oh, really? That's a fib I drew a long time ago, supposedly. Chrome won't use... so this is the problem, is that freestockcharts.com only uses, you can only use Internet Explorer. Because it uses the Microsoft Silverlight plugin. So this is Silverlight running, and Silverlight's running these ads too. So that's the problem here. So anyway, so I don't know that the ad blockers, I'm just gonna, oh, what's this? Maybe if I leave that there, let's see what happens. I don't know. I'll mess around with it. I'll see if it doesn't block everything. Anyway, all right. So Broadcom, that came in on this fib that I had from before. Let's go daily. See what that fib is from. Ah, there it is. That's the fib. Boom, and I was drawing the targets. Okay. So today, intraday, they came down and touched this fib. Interesting. Like I said, that line was there before. And then a rally up to the VWAP. So maybe we can dig in on this a little bit. See what happens here. I'm gonna do that then. I'm gonna load up. I'll find a fancy ad blocker in Internet Explorer. Only reason why I don't have one is because I never use Internet Explorer. Right? This is like the only thing I use it for, so I didn't even think about it. But I'll set that up, guys, so that we don't have these issues happening. So this may be one, guys. We may have a chance here to catch this floating up a little bit. Let's see. Let's look at AVGO. I'm going to pull up an options chain here. See what we got. Options. Got some weeklies. So whenever I see this kind of action happening, I'm always like so tempted to just sell these puts down under 245, and just and make it a one-day trade and say forget about it, right? Obviously, there's not a lot of juice in those though, right? Because it's one day, but it's still $20. But the problem is you'd have to sell, you'd still have to cover yourself, right? So you'd get not even 20, you'd get 17 and then 5, and so it'd be $12, and you're risking $200. No thanks. So then the other side is just, buying like an out of the money call. But the problem is this is expensive. Even spending $1 on this, so then the stock's got to get up over 251. I guess that's not too bad. It can get over 251. So something like that, rolling the dice on a 250 call in the hopes that this continues to bounce. There's no gap down, so you don't got to worry about it getting in the gap or gap being defended or anything like that. So there you go. And yeah, that's the other thing too, guys. That's a huge bang for the buck. But there's nothing saying that you have to. There's nothing saying that we have to stay in this one-day thing. You can go out a week. You can go out 2 weeks, right? And you could fade the earnings that way. Now, again, guys, this is assuming that you don't already have anything on, right? Didn't we sell an out of the money put spread? Is that what we did? No, I didn't sell an out of the money put spread. They all go together, man. I should have. I'll pull up I can't remember what the trade that paid was on Broadcom. That's right. I can't remember yesterday. Guilty of not remembering yesterday. It was the not quite. That's right. It was an 8th. I went out to the 8th. I remember that much. Let's see. So go out to October, sure. Whatever time you guys are going to do, it doesn't matter. So the further out you go, as long as you're using a spread, then you shouldn't be concerned with what you're paying for the long end, right? So in this case, if you're paying $9.10 for the 250, well, I guess this is a bad example, but because it's very expensive. But if you're paying 910 for the 250, make sure you sell the 260. You're gonna get a big chunk of that back. So you can go out as far as you'd like to go. It doesn't really matter. Just make sure you're getting money back by selling on the other end, right? Because there's no reason to just buy all that time value just for the sake of buying all that time value. You can get some of it back. Okay. One that I really wanted to talk about. Let's see. Let's get over here. Was Momo. Earlier on in the week, this guy needs to refresh. Earlier on in the week, it was Momo. Came under pressure, and that was one of those head scratchers where we're like, well, what's the reason? Oh, Splunk, guys. Did you see Splunk last night? Yeah. These guys are rallying up pretty good here. But Momo, once this loads, there we go. Huge dip. Found some support. Trickled up. Under a little pressure today. Now, I'd be looking to fade Momo. Because I think it at least gets back to the top. Gets into 40. It's got to get to 40. And you can give yourself a couple of weeks on this one too. Man, this is I gotta figure. This is almost like I can't even. It's like inoperable. I can't even have any fun when this is reloading this fast. So you can go out a few weeks, guys. Go out a week or two on Momo. But I'm looking to fade that move. VEV. Oh, do I think iPhone 8 would trickle back? Yeah. I mean, yes, David, I do. What happened to these guys? See intraday. So you get the big gap down. They got into the gap a little bit. Come back. This could be a nice little candidate. I'm wondering why that stalled out so quick. When I start to see this, that reminds me of that good old rope-a-dope action, right, guys? Where you get in a few ticks up into the gap, you think it's going to be a breakout, and it stops. Then it comes back down, maybe challenges, to break down, and then it stops. And then it's one of those kind of windy. So keep an eye on that for that good old rope-a-dope action, like I said. Kind of a false breakout that ends up coming back down. Keep an eye on things. Speaking of keeping an eye on things, look at this thing. So now we're ticking up a little bit. The market's giving up a little ground. Remember, we have Draghi later today. We already had Yellen. We're going to have Draghi a little later on today. Never a dull moment when it comes to volatility, right? I mean, unbelievable. I think that's going to occupy most of my day is trying to finagle this UVXY thing. I'm going to have to adjust accordingly, I believe. Maybe I have to come down to that 320. We'll see. I'll keep an eye on it. What's the market doing? Market rolling over a little bit. What's this line? Look at that. We're still playing in this fib, guys. Monday to Tuesday, right? Very short. Just the weekly fibs that we're messing around with. 38.2 was basically the bottom end of the opening range on the 23rd. Came down, violated it, came right up to the 23.6, violated it, rope-a-dope, came down, 50% fib. Again, the 23.8 ends up settling the day right around this 38.2. This morning, they take it up to the top end of the weekly range. Now we're stalling out a little bit. The question is, how low do we go? And does it bounce? So the next level is this 23.6. So that puts SPY down. It's like 244, probably 244.70. Like I said, we're having all sorts of issues with Microsoft today. Yeah, we'll recover, buddy. All sorts of issues with Microsoft today. So I think maybe it comes down, entertains this 244 level, 244.60. So it looks like 244.70 even, somewhere around there. Looks to see if there's any bids down there. And then if it, obviously, if we find the bids, we'll creep on higher. SPY. Let's go. Back to 5 minute. There we go. So we'll see. Now we did have a nice little gap up at the open, so maybe they defend this level. And that's assuming it comes down, guys, like I said. Here I've got a VWAP on SPY, showing a little move back to the VWAP here. Perhaps this is bid. I wish I had my live futures quotes going. I could see where we're at on that. See if it's catching a bid at this VWAP and then makes another run at the highs. That would be the rosy scenario for the day, is that it comes down to the VWAP and then breaks on through the weekly high and then continues higher. Because if it does break the weekly high, the S&P breaks the weekly high, you are going to see volatility get squeezed out of this a little bit today, even ahead of the Draghi speech, I think, and then I can rest easy, right? We wanted to talk fibs. I suppose I could use the SPY. It's as good as anything. Nah, I've got this marked up. I want to find something that I don't have marked up. Just a regular SPX. Let's do that. All right, guys, this is what I'm going to do. No, you know what? It's not what I'm going to do. I'm going to pull up NinjaTrader, and we're going to do some fibs in NinjaTrader because then I know NinjaTrader won't blow up on me. Right? So I'm going to close Internet Explorer real quick. Going to bust out NinjaTrader. Give me a second. We're going off of there we go. Now, I talked about NinjaTrader in the past. It's a NinjaTrader itself is free. Anybody can get it. And it comes free with this end of the day connection. So you get actual data for free for end of the day kind of analysis stuff, right? If you want real-time quotes, you're going to have to pay for it. You know, intraday stuff, you got to pay for it. But you do get end of the day. So it is good for your basic, you know, kind of analysis. So let me pull up. I'm going to get rid of this fib and then just redraw it. So Kurt, we were talking about fibs yesterday. I'm going to do a quick little fib lesson and then we'll get back to GameStop and the like. So essentially what this comes down to is back in the day, and I don't know how far back I want to go, but you had an old Italian mathematician that basically uncovered these relationships that he saw in nature. And it was, you know, similar like the golden ratio and things like that. But essentially he developed a sequence where if you take one number and then you got to put one in there for whatever reason and just add it to the previous number in the sequence, that you get, you know, this sequence, right? Okay, and then it keeps on going through perpetuity. But the ratio of each number to the one before it and then one before it, those ratios start to approach, you know, 618, 764, 50% obviously, 23.6, 38.2, these kind of things. So traders started noticing that after like a big move, that these things had a tendency to retrace a certain amount of like a large move. And then from there, it's just grown into a whole big industry basically. So in NinjaTrader or even in whatever charting platform you have, they've got these fib retracements. So what I like to do is take like a recent low. Some people would argue use this, but whatever. I got this intraday spike down low to this spike high, and this is in the yen. So basically the yen's November range. And we've kind of been playing along this November range the whole time. So it gives you some key levels. So in this case, I draw the 76.4, the 61.8, the 50, the 38.2, and the 23.6. So moving down in this direction are retracements, right? Because you're retracing the previous price action. Then if you flip that over this x-axis, then you get what's known as the extensions. So this gives you upside targets for moves out of the fib. So what you'll see, and this plays into Elliott wave theory very well, where you have clear-cut definitions of how much wave A is supposed to go, and then the retrace B, or wave 1, and then the retrace 2, and then the move higher 3. So they're all pretty clear, definitions of what you can look for. So here we've got move up higher, and then a retrace to the 38.2, to the 23.6, 38.2, 23.6, 50, 38.2, 61.8, 23.6, 50. It's just amazing how these kind of bounce around, right? And now we're kind of approaching down here. So you can use this to determine areas of potential support and resistance throughout the course of trading. So here I use it on dollar yen, but you can use it on whatever you want. Let's just pull up GameStop since Kurt was talking about GameStop. Now I don't know if there's been a big move in GameStop. So here you can look at the last sort of big move up, but that was kind of completely erased on the way down. But if you look at what happened, let's cue this up a little bit better, down to this wick, up top of that wick. Okay. So you got this move higher, boom. And then now as you're trying to figure out areas of potential support, see it blew through support at the 38.2, kind of found some support at the 50, right? So some things will interact better than others. But they pretty much always come into play, right? It's like, why did this happen to top tick there a little bit? This obviously ran out of gas here or found a bid there because that was the low. But how does this come down intraday and kind of tick down here a little bit, then go higher and settle right near this line? So when you start using these fibs, you'll start to see things. And instead of looking at absolute price, you'll see how maybe things get, there's like a build up in resistance. So it's almost like it's like a graduated resistance level, right? So there's some resistance here, and there's going to be people within a few levels of that Fibonacci level that are going to continue to sell into it, right? So it just gives you a different perspective when you're looking at charts of where these areas of potential support and resistance might be. And then like right there, like why is that happening, right? It's crazy. When you start to see it, it's pretty remarkable. And like I said, you can apply that to anything. It's basically anything that made a big move and then retrace some of its larger move, right? You can mess around with this. Okay. So, now about GameStop. New Xbox, iPhone cycle plus 4K games won't be easy to download because of size. Yeah, I mean, there's certainly like technological limitations right now to the streaming argument. But I think over the course of the next 5 years, 10 years, you're starting to see the writing on the wall at GameStop. Even though they're trying, I don't know why GameStop, and I'd have to read a lot more about their business, I suppose. They don't, do they have, I don't know that they have a streaming, like rental kind of game service, because that's what they should be doing, right? I don't know if they have the licensing to do that, though, from the manufacturers. And then the other thing is all these guys are trying to cut out the middle guy. It's not just GameStop getting cut out of video games, but look at like Nike trying to cut out Foot Locker and Finish Line from the shoe game. I think as technology gets better, these big companies are going to try to cut out the other huge middleman companies that are out there, which is even worse for these poor retail guys because they were struggling to begin with. So you're getting squeezed for the consumers, and now you're getting squeezed from your suppliers. That's not a good scenario to be in. So in terms of long-term prospects for GameStop, it's been a struggle, and I think that's why you see GameStop doing what it's doing. So if I'm looking for growth, or even on the flip side, if I'm looking for a value play, I don't know that GameStop is number one on my radar right here. I think you got better ideas that are out there. Well, the market right now, guys, I'm just checking in on this, is running away from my UVXY trade right now. Starting to tick a little bit lower on the NASDAQ and the S&P 500. It's going to be one of those days, gents. I can feel it. All right. So there's the GameStop. We got to find some kind of actionable item. Let's check in with my my dollar yen trade. The FXY put has yet to work because the yen's been stuck right here, sort of 109 to 110 for the last, since I put the trade on, really. I was expecting Jackson Hole to finally be what we needed to push the dollar higher. So far, it hasn't been. Like I said, this selling down into this was met with buying in April. It was met with buying in June. It has yet to be met with. Well, I thought it was. They bought it initially, but then it just wasn't strong enough and it stalled out. So, definitely making me feel a little bit nervous about this yen short. Right now, I've got 3 weeks still on it, so it's not the end of the world. A lot can change in 3 weeks, guys. 15 candles. Goes all over the place. But I'd be lying if I said I had no doubts. Certainly have doubts. So we'll see about this. The other thing is this euro trade where I wanted to be short the euro because it was up at 118. It looked like it was starting to break down finally. And this bad boy has been pretty resilient too. While it looked like some lower tops were getting put in and some lower lows were getting put in, there's really no conviction to either side. And I'm surprised that we had these days, multiple days, where you had an intraday dip of the wick under 117 with no sustained break whatsoever. So that actually implies that there's higher highs on the way, that this thing's going to break out in the other direction. So part of my return of the dollar thesis is not played out. Look at a breakout. Now, again, I'm a day late on this now, so I'm not sure where we're at. Let's see. PVH is at 124.65 right now, so it's down here. Not what you want to see typically intraday, the big spike up is great, but then when you end up closing the day lower and then the next day is even lower, I'm worried about a scenario like we had with AMD. Pull up this AMD where, look familiar, guys? Big spike, even, well, let me zoom out a little bit because this will make more sense. Where you get a spike up intraday, kind of stalls out, ends up finishing the day a little bit worse, and then the next day is worse. That's not a good sign. That's a sign of an exhaustion of buying, and there's not enough bulls out there to continue to push it higher, and then ultimately it ends up stalling out. Although I am happy that AMD now has found support at the 200 day. So back to your PVH. 124.42 is where it's at now. So the stock's here, and again, you're back underneath the previous highs. So I'm not so sure about this PVH. Market's still trying to hang in there a little bit. Creeping down. See where SPY is. SPY is 244.87 right now. So there's that. Let's check in on this order that I have. I don't think that we're getting anywhere close. Probably not. There we are, guys. We're still open on this. The good news is when you got this open, I'm sure it's different on everybody's platform, but when you have it open here on E-Trade, you can see where your price is, where the bid and the ask for, you know, the other part of the equation is, and then where each of these options is trading. So right now, it said the last price was 274, but it's basically trading 255 by 272. So, you know, let's say I could get filled at, you know, 265, 264, and then it's going to cost basically 9 cents on the other one. So 255 is basically where I could get out right now if I rip the parachute. So we're going to hang in there a little bit, see what the market does, and go from there. 31.55, 31.60, whatever, on UVXY right now. So I'm going to keep an eye on this. Again, guys, I paid $165 for this, so still good. So we'll see. I'm going to keep an eye on this throughout the course of the day. See where we go. I'm not going to get too cute with it. I don't want to hold this thing forever. And like I said, I don't want my whole day to be spent watching one stupid ticker. So we'll see. All right, so nothing there. What's like a real actionable item? Like, what is jumping off the page of me that I really want to sink my teeth into today? There's no answer, guys. I think it's a Friday in the summertime. It's going to be lower volume. And we got the Yellen speech. That didn't do too much. The market's retraced a little bit. We'll see if later on in the day they get enough oomph to, you know, push above. But we're going to get awful close to when these traders are going to check out and just say forget it. Because the Draghi comments, I think, are after. When does Draghi talk today? Does anybody know? I'm going to find it out right now. If you're looking for a good place to find, you know, a calendar, an economic calendar, I like to use Daily FX. You get calendars, economic calendar. It's pretty nice. It has everything here. Tells you what's going to happen, when it's going to happen. So Ma Yellen already talked. And then here we have Draghi coming up later on. This says 3 p.m. Eastern. Okay, wonderful. So an hour before the market closes. Oh man, I don't know if I want to stick around and play with that. That's funny. Ulta fighting its way back. Is Ulta fighting its way back? 210. We'll see. That may, like I said, guys, wanting to fade some of these was initially what I came in here for. But if they're not giving it to us, then forget about it. But that Momo trade, I think coming in there, going out a couple of weeks on Momo, in the hopes that that starts to claw itself back, I think is a good idea. Obviously, you were probably scarred from the initial move. So if you don't want to over lever yourself in one direction on that, I completely understand that. But that is, an opportunity, some low hanging fruit that we're looking at. And yeah, guys, for real, don't force it. There's nothing jumping off the screen at me today. Yeah, so don't force it. What I plan on doing, guys, is in the future, every time we get a nice little spike in volatility, I want to step on it. The only reason why, we could have really cleaned up over the last couple of weeks if I was, more nimble. And that first spike up, right? World War III, I call it the World War III spike. If I would have sold the World War III spike like I did, which was good, and then just covered right away, and then waited for the next spike, which was the Charlottesville spike, and then done the same thing, stepped on its neck again, go out a couple of weeks, I would have been in a different situation here. Still in a good situation, but it's I like I said, I don't like this last day stuff, and neither should you. Don't put yourself in a position where it's the last day and you need the market to do something for you. Go out far enough, especially with UVXY, that time is going to work for you. Because remember, the backwardation is what kills UVXY. So I'm going to show you here. Because people say that, but what does that mean, right? So I'm going to spell it out for you right here. So here's the VIX futures curve, right? So you have September futures, October futures, November, yada yada, right? Okay. Now, contango is how much more this next month costs than the month that you're in, right? So as you go out, the further out months are more expensive. You have contango. The other week we had this weird thing where we had an elevated front month and a drop down in that second month. That's backwardation, which is the opposite of contango. Okay. Now, when I'm saying contango works against you, the way that this UVXY and VXX and insert your favorite volatility thing here works is that they constantly trying to give you a 30-day average of volatility, right? 30 days. And this is an important fact. So the September contract expires in 25 days. That's not 30. The October contract expires in 53 days. Also not 30. So what they do is they have a ratio of the front month to the back month, which ends up blending together to give you a 30-day volatility number, okay? So each day that passes, these guys sell this front month and buy the back month in order to extend or lengthen, get back to that 30 days, right? So if they're constantly selling this front month and buying this back month, this 6.17% is constantly working against them, okay? And then now when you make it 2 times leverage, like UVXY, now you have contango working twice as hard against it, right? So that's why you look at a long-term chart of UVXY and it looks the way it does. Over the long, geez, not even, Let me get rid of this 200-day in here because it's kind of messing up our setup here. Remove, apply. Okay, there we go. That's why when you look at a long-term UVXY chart, it's kind of always going down, right? Because this contango is constantly working against it, okay? Constant to the downside contango, right? So there you go. All right, guys. That's all I got for you here today. It's been an hour. It's been a fun hour. I don't see a lot that's jumping off of the page. Feel free to, as David said, pop a beer, close down your trading program, and just forget about it. It's until like 2 o'clock. I think there's going to be some craziness that's going to happen at the end of the day. So it's just a question of if you want to stick around to the end of the day and stress yourself out, or if you just want to go ahead and rip it and just forget about it and go home. So that's the scenario for the day, guys. So let me know what you're going to do. I'm going to be in the chat off and on throughout the course of the day because I'm probably going to stick around on this UVXY and see how I can manage this. It has ran directly in my face since showing you that I could have been out at 303. But whatever. I'm going to check in with this. We're going to see what happens. And that's all I got. All right, guys? So let me know what you want to see next week, which shows you want me to cover, which stocks early on, Monday, Tuesday. I could do Best Buy on Monday if you guys want to do that. And then Tuesday, I'm going to have to figure out, something. Like I said, traveling on Wednesday, Thursday, Friday, I'm taking off. And then Monday, we have that Labor Day. So going to be, a little bit of a pause. So thank you guys so much for hanging out with me here today on Live Trader. Have a fantastic weekend, and I'll see you guys in the chat. See ya.